So today we'll start with this question from 21 onwards. This is from 2022 October November paper 12. So this is the part 3 of this question. So in this question it says 21, company purchases inventory on credit. The following information is available. Sales revenue 440,000, purchases 270,000, trade payable 90,000, trade receivable 110,000. What is the trade payable turnover in days? So the formula for trade payable turnover days is trade payable divided by credit purchase into 365. Okay, so if you do that, so here it says trade payable is 90,000. Okay, here in the question, this is a company purchases inventory on credit. So all these purchases are on credit. So 270,000 is purchase, and then we need 365 days. 365 days. So the formula is trade payable divided by credit purchase into 365. So it's coming 121.667 days. So if I round it off, then it's coming 222 days. So which is option C. So the correct answer for this question is option C out here. Okay, next question. A business has the following wages policy for its direct workers. Standard work Standard working hour per week 40 hours. Basic rate per hour is $16. Overtime payment is basic rate plus 25%, and standard production per week per worker per week is 100 units. Bonus per $4 per unit in excess of the standard production. So in this question, if we produce anything above 100 unit, then in those extra unit we will get $4 as bonus. Okay, and if you work anything above 40 hours or any time above 40 hours, then the overtime payment would be basic rate plus 25% of the basic rate. Okay, so let's quickly calculate what does that mean. Okay, so if we say basic rate is 16, okay, let's go to the next. Basic rate is 16. So 25% of basic rate is 25% of the basic rate is 4. Okay, here. Now that means overtime payment is 16 plus 4, which is 20. Okay, for every hour you work extra, you will get payment of 20. Now, next part of this question is says that last week Ben produced 115 units and earned $860. How many hours did Ben work last week? So this question is very easy. So here he produced 115 units. Okay, so as per the required, we are supposed to produce 100 unit at least, but he produced 115 units. That means 15 unit extra. And in the question it says that if you produce any extra units, then the bonus would be $4. Okay, so the bonus would be $4. So that means he is receiving for extra production is 4 into 15, which is $60. Okay, so this is bonus payment. So bonus payment is $60 out here for unit produced. Okay, question was asking us how many hours did Ben work. Okay, so normally his working hour is 40 hours, and in each hour he works he will get 16 as a normal rate. Okay, so if you work for 16 hours 40 hours and if he gets payment of 16, his normal payment is 640, and he produce 15 units extra, so he get a payment of 640 as well. So altogether his total payment here is 700. Okay, but as we can see in this question that he received a payment of 860. So that means this extra amount is from the overtime that he worked. Okay, so 860 he received. So that means this extra amount which he received, which is 160, is from the extra time that he worked. Sorry, not equals to 160. This is from the extra time overtime payment. Okay. Now overtime payment is 160, and we know that for each hour that they work extra time, they would get 20, which we calculated out here. Okay, so that means extra time or overtime is, this is duration, which is 160 divided by 20. So he worked 8 hours extra. Okay, he was already working 40 hours, which is required hour, and then 8 hours extra to earn this 160 extra. Okay, so total time that he worked together is 48 hours. So the correct answer is A, 48 hours. Okay, next question. Question number 23. The statement are correct about, sorry, which statements are correct about the first in, first out method? Okay, FIFO method for inventory valuation. So in first in, first out method, whichever inventory comes first, we'll use that first. Okay. So option one, issue to productions are valued at most recent purchase price. No, it is not. Okay, because we are using the one which we purchased first. So the older product would be used first. Okay, so number two is issue to productions are valued at the oldest purchase price. Yes, this is true. So number two is correct out here. Okay, is the correct option. And then number three, provides a higher profit during the period of inflation. Yes, it is also correct because when we purchase inventory when we use inventory using the FIFO method, and during the inflation the price of the goods or services increases. Okay, but that time we are using the old stock which we have purchased at a cheaper price. Okay, so that time it provides the higher profit during the inflation because we say that the cost of product that we are producing is cheap. Okay, so that means we can sell it at a higher price, so we can earn higher profit. And last one is provide a lower profit during the inflation. This is incorrect. So right answer is 2 and 3, which is option C. Okay, next question. Question number 24. It says a manufacturing business has two production department, assembly and painting. The following information is available. Machinery at net book value 150,000, 100,000. Machinery repair cost 14,000, 6,000. Machinery machine operating hours 60,000, 15,000, and the number of machines 30 and 10. The total machinery insurance cost for the year was 5,000. How much insurance should be apportioned to the assembly department? Okay, so now this is the overhead that we have, which is 5,000, and this overhead, which is machine insurance, needs to be apportioned between assembly and painting in the machine net book value. Okay, so if you look at here, the ratio is 150,000 is to 100. So if I break down this, then it would be 3 is to 2. Okay, so this 5,000 divided by 3 is to 2, which is 5. So 5,000 divided by 5 into 3, which is 3,000. Okay, so for assembly it is 3,000. If you did not understand that, please re-watch this particular part. So let's go to the next question. 25. Which statement about the absorption cost is correct? Okay, it allocates fixed cost to the product when it is sold. Okay, so we allocate fixed cost only when we are selling the product. Number two, it allocates fixed cost to the product whether it is sold or not. and then it increases the cost charged to the income statement. It reduces the cost of the closing inventory. The correct option here is during the absorption costing, which is also known as total costing method. Okay, we include all the fixed cost and variable cost in the product, whether we sell it or not. Okay, so that means the correct option is it allocates fixed cost to the product whether it is sold or not. So this is your correct option. 26, which is equal to the total revenue at break-even point. We already know that break-even point is when we don't earn any profit or incurred any loss. So break-even point is equals to total revenue equals to total cost. Okay, total cost means total variable cost and total fixed cost. Okay, so break-even point is total variable cost and total fixed cost. 27. It says a business manufactures and sells a single product. It is sold for $10 per batch. The variable cost is $4 per batch. The fixed costs are observed based on normal activity level of 5,000 per batch at $1 per batch. Okay, so here the fixed cost is $1 per batch for 5,000 batch, so altogether 5,000. Okay, so if we increase the batch production, remember this fixed cost would not increase because fixed cost remains fixed. Even if we decrease the production level, the fixed cost remains 5,000. Okay, what is the profit using marginal costing if the company makes and sells 6,000 batches? See out here in the question, the batch production is increasing. So if you increase the fixed cost, your answer is incorrect. Okay, so fixed cost will always remain 5,000. So let's calculate using the marginal costing out here. So the selling price per unit is 10, variable cost is 4. So the contribution per unit we calculated is 6. Okay. Now, in order to calculate the total contribution, I multiply this 6 with the new level of sales or new batch that we are producing. So 6,000. So 6 into 6,000 is 36,000 total contribution. And as I told you that the fixed cost does not change with the level of output. So fixed cost remains 5,000. So fixed cost is 5,000. So the profit is 31,000. Okay. So the correct answer in this question is 31. Okay. So let's go to the next question. So next question is, a company provides the following information for a year. Sales 400,000, total variable cost 240,000, total contribution 160,000, total fixed cost 100,000, and the profit is 60,000. Okay. To increase the sales volume by 20%, the company planned to reduce the selling price by 10. Okay, and then total fixed cost and the variable cost per unit will remain unchanged. Okay, so this question is very easy to answer if you understand how it works. Okay, so in that case, we can see that the old selling price was for 400,000, but it wished to increase it by 20%. So I increase it by 20%, which is 80. So now the new selling price would be 480,000. Okay, but it also aims to reduce the selling price by 10%. So the 10% of 480,000 is 48,000. So if I subtract 48,000 from 480,000, so the new selling price is 432,000. Okay, along with that, variable cost is 240,000, and in this variable cost will also increase because we are increasing the output. So variable cost also increases by 20%. So 20% of 240,000 is 48,000. So the new variable cost is 240,000 plus 48,000, which is 288,000. So selling price minus variable cost, which will give me contribution. So contribution in this case is 144, and then fixed cost out here is 100,000, which is this much. So the new profit is 44,000. Okay, but as we can see that old profit was 60,000, new profit was 44,000. So the difference in the profit is 16,000. Question is asking us by how much will profit for the year changes in percentage. So we need to calculate This 16,000 is what percentage of 60,000? Okay, so in order to calculate that, 16,000 into 100 divided by this 60,000, okay, which I'm getting 26.6667, so round it up 26.67. So the correct option is it is decreasing by 26.67. Okay, 29. A business makes and sells a single product. The budgeted sales of 5,000 units are as follows. Selling price 75, variable cost 25, then fixed production cost 18.90, and then variable selling expenses is 5. Okay. So now in order to calculate this, question is asking us the company plans to reduce the selling price to 60 per unit. How many extra units will need to be sold to break even? So we need to find out what is the break even point. Okay, so there are two break even point we need to find out. What is the new break even point and the old break even point? Okay, so here first let's calculate the fixed cost. So fixed cost out here is 18.90 for 5,000 units. So 18.90 into 5,000, that gives me 94,500. And then question says old selling price is 75, the variable cost is production cost and the selling expenses, which is 30 altogether. So selling price minus variable cost is the contribution per unit. Okay, 45 out here. And here we change the selling price to 60. So 60 and the variable cost still remains same, which is 30. So selling price minus variable cost, the new contribution is 30. Okay, we calculate the break-even point. So break-even point calculation is selling fixed cost divided by contribution per unit. So we know the fixed cost, we know the contribution for each of this, right? So selling price divided by contribution per unit, which is 9. Look at here, 94,500 divided by contribution per unit. Something happened here. 94,500 divided by contribution per unit. So here it is coming 2,100. Okay, and in this fixed cost divided by contribution per unit, which is 30, and now the new contribution out here, the new break-even point is 3,150. So the difference between these two is 1,050. So in old selling price 75, the break-even point was 2,100, but now the new selling price 60, the break-even point has increased to 3,150. So that means there's an increase of 1050 units in the break-even point. So the correct answer is option B, 1050 units. Okay, and then the final question is, which statement about the budgetary control systems are correct? It is a long-term planning, it is a short-term planning. Remember, the budgetary control or the budget that we prepare is for the short term, so this is a short-term plans. Okay, and then it is a qualitative, it is a quantitative. Okay, so budget is based on quantity. Okay, how many, how much, by what number. Okay, so quantity is calculated out here. So the correct option here is option D, 2 and 4. Okay, I hope you like this video. So if you like this, please subscribe to my channel and stay tuned for the new videos.